Summary. Let us summarize what we have learnt. The item that is meant for final use and will not pass through any more stages of production or transformations is called a final good. Goods like food and clothing, and services like recreation that are consumed when purchased by their ultimate consumers are called consumption goods or consumer goods. Some goods make production of other commodities feasible, and they themselves don't get transformed in the production process are called capital goods. The goods which are not extinguished by immediate or even short period consumption and have a relatively long life as compared to articles such as food or even clothing are called consumer durables. The sum total of the monetary value of various diverse commodities gives us a measure of final output. Capital goods or consumer durables, once produced, do not wear out or get consumed in a delineated time period. When it is made from the value of gross investment in order to accommodate regular wear and tear of capital, it is called depreciation. The production of consumption goods would not be feasible without capital goods. Total output of final goods and services produced in an economy in a year has two different parts as the consumer goods and services and the capital goods. The expenditure method measures the aggregate value of spending that the firms receive for the final goods and services which they produce. The product method measures the aggregate value of final goods and services produced by all the firms. The aggregate of incomes received by the households is equal to the expenditure received by the firms because the income method and expenditure method would give us the same figure of GDP. We deduct depreciation from GNP. The measure of aggregate income that we obtain is called Net National Product, NNP. The idea behind national disposable income is that it gives an idea of what is the maximum amount of goods and services the domestic economy has at its disposal. Real GDP is calculated in a way such that the goods and services are evaluated at some constant set of prices or constant prices. Consumer Price Index is generally expressed in percentage terms. We have 2 years under the consideration. One is the base year, the other is the current year. GDP calculated in the standard manner may not give us a clear indication of the productive activity and well-being of a country. The externalities do not have any market in which they can be bought and sold.